Test, test, 1, 2, 1, 2. What's going on, guys? It's Ricky with TechBud Solutions. Hope that you guys were all having an amazing Sunday. Today's our Sunday stock talk. We're going to be breaking down the top 10 stocks that our group members see value in. I hope that if you have any specific questions that you would like to ask me, just feel free to comment it in the live chat, and I hope that you learned something new. So let's go ahead and jump right to it. I really hope that I earn your thumbs up if you learned something new. So one of the things that I quickly want to talk about is the overall NASDAQ market. Right now, NASDAQ market, the futures market, is opening up in the reds. Right now, the NASDAQ futures market is down about 0.5% based off of where we closed on Friday. So on Friday, we were already selling off a decent amount. Now we're trading even lower. So what this insinuates is if the market holds at this level, the overall NASDAQ market will open up in the red, probably 1.5 to about 2% in the red. So how's the giveaway winners? Yeah, so we have Pascal that is visiting us from Germany. For those that are unaware, we did this like staycation giveaway for our Shop TechBuds store. And it was like our first staycation that we've done in a really long time. Pascal, he went from Germany. We flew him in, and he got here yesterday, I'm pretty sure. And we were hanging out today. We had some breakfast, and I took him in the Ferrari and in the Tesla and stuff like that. So it's really cool. He's already getting all set up at the Airbnb. And then we have two of our other winners that fly in on the 23rd, which is on Tuesday. For those that are in the Arizona area, Tuesday through Thursday, we're going to be hosting different events at the HQ. If you want to join us, I hope that you're not too shy to ask. Our HQ is located in Chandler, Arizona. Shoot me a direct message either via Discord or via Instagram. So all the links are down in the description if you want to shoot me a direct message via Discord. It's the first link down below. And again, we have the office space. We'd love to just meet you in person, right? And that's going to be, again, on Thursday for our pizza party if you want to join us. And it is for free. So let's go ahead and jump right to it. So what stocks are we breaking down? So playing Uno with Ricky's friends now. I like it. Let's go ahead and break down SQ. What is going on? Ed Ventures. How are we doing today? So SQ, if I'm not mistaken, has been on a continuous descending pattern. I like looking at the larger time frame, so I clicked on the day chart down here. One of the main reasons for that is I like to have a better understanding of the overall direction of these specific stocks, right? So with that being said, I can see that there's a consistent descending pattern, meaning that it's selling off. Anytime that it tries to recover, it makes lower highs, meaning that when it tries to run up, it doesn't go as high as it did before. It peaks, and then it sells right back off. And it's doing a very similar thing where it hit highs of $94, it peaked, lower highs, and then it's continuing to sell off. It wouldn't surprise me if it continues to sell off and makes new lows based off of how aggressive it's been selling off. This one is more of a chance of it's a high risk, high reward type of play. I think it's raining outside actually. It's a high risk, high reward type of play. If you think that SQ is something that you want to invest in for the overall long term, there's just direction's not in your favor, and it's been selling off since late last year. It's almost been on a full year since it's been selling off, and because of that, I don't like to overcomplicate my investing when direction is not in your favor like that, and it's something that shows that it's been struggling. I just say that keep it simple. You can set alerts, but definitely doesn't make sense to invest in it right now as overall direction is against you. So let's go ahead and move on to the next one. We got AMD and STEM. What's going on? Again, if you want me to break down your stock, just please make sure that you share it in the live chat and you drop a thumbs up. So STEM, we can see that it overall has a consistent descending pattern. It looks like it had a nice little run up. Maybe this is why you're bringing it up. It maybe popped up on one of your scanners. It's up over 100%. This is screaming huge red flags of this thing's going to pull back. Probably going to continue to sell off based off of previous patterns, and it would not surprise me that it's just going to return to its previous direction. I don't like playing or trading anything like this, and I like to keep my trading simple, so I would move on from that. So AMD is one that I've been watching to potentially invest long term. especially with the chip shortage, right? AMD is something that there was huge potential because of the bill that was just passed for NVIDIA and AMD. But overall, I mean, we peaked at 164. I think AMD and NVIDIA are two, stocks worth looking into. I don't think that they're going to recover anytime soon, but I think that at the price point that they're at right now, based off of previous time frames, I mean, we're literally getting it back to 2020 or 2021 levels, based off of previous patterns. So lower highs, lower lows, still selling off, and it looks like it's overall showing this descending pattern. I would really like to see if AMD begins to hold above the EMA and actually make higher highs and higher lows and begins to trade above the moving average. At that point, it would be showing progress in something that it really hasn't done in quite some time. So Ricky, check out Meta. Meta is one that based off of how they produce revenue, Meta is like an absolute monster, right? It's a strong descending pattern right now ever since they talked about Meta platforms and Facebook has made that shift. I read this article and I thought it was pretty interesting, so this is why I'll share it with you guys. But Meta platform, even with where it's at right now at its current price point, one of the main reasons, if you're unaware, when they made this shift, I mean, they're spending a lot of money on this metaverse. And if the metaverse ends up being a complete bust, then again, it's just burning a lot of money quarter over quarter. Facebook is still doing very, very well with its three main companies, such as WhatsApp, Facebook, and Instagram. Obviously, tech stocks did take a hit because of the Apple issue that they ran into when it comes down to no longer being able to track, so advertisers are beginning to spend less money. But overall, if Meta ends up performing or Metaverse ends up panning out the way that Facebook thinks that it will, this article that I read said that, it wouldn't be surprising if Meta is one of the most, well, how do I want to say this? One of the most, that has one of the highest potential in comparison to any other stock that's publicly traded right now, right? I think a lot of people do doubt it because people don't really understand the metaverse and or the purpose behind it, but it's just something that we'll have to follow up with. And I really like it at this price point. I think that if you can tolerate the time that it will take for the stock to recover, it could be worth looking into. But as of right now, direction's not in your favor, and I haven't heard of any significant milestones that the metaverse Meta has announced. So let's go ahead and move on to the next one. So here we go. All right, we have Tesla. What's going on, Carlos? What's up? We'll break down Tesla real quick. So Tesla has a pretty interesting quarter ahead. As many of you guys know, Elon Musk began liquidating some of his shares. I think it was about almost $8 billion worth of Tesla. We've been trading sideways, and it does this, quite often, where it hits a resistance level and it just can't surpass it, and then it begins to retrace. I would say that as long as Tesla holds above the EMA line, it tends to do a pretty good job there. But if we begin to retrace and we pull back below the EMA, then expect to go back down to that $700 price point. I have all my alerts set. If we break above 950, I think that's pretty significant. That would be on our way back to $1,000 a share. I had an alert. I'm waiting for it to get closer to the EMA, and then obviously if we break below EMA, I want to make sure that I stay up to date. I think Tesla, based off of their Optimus, which is the robot that they're coming out with, I think there's a lot of potential with Tesla, their gigafactories that they're building, and how they're just dominating this expanding EV sector, right? I think they're way ahead when it comes down to the data that they have. They're almost full self-driving. If I'm not mistaken, I think this weekend, either this morning or last night, Elon Musk sent out a tweet saying that everyone with the full self-driving, moving forward, it's going to be a $15,000 upgrade of when the full self-driving is already out, right? So if you don't have full self-driving yet, then later on it's going to end up being a lot more expensive, and that's something that is important to take into consideration, because I could see that to be a reason on why there's going to be more demand around full self-driving, which could cause, obviously more people to want to buy it now, which could cause the stock to go up based off of that reaction. So when will the split for Tesla happen again? That's actually a really good question. So Tesla's stock split is going to happen on the 24th of August after the market closes. So on the 24th, let's say that Tesla is at $900 a share. If once it closes and if you own one share, you're going to have 3 shares at $300. So again, you're just getting 2 additional shares, but the price is getting cut into thirds. So please make sure that you're aware of that. BBBY, let's talk about it. Why not, right? BBBY, one of the biggest pump and dumps that we've seen in some time, right? So it was a meme stock, went from lows of $4 all the way to highs of $30, or really like 28, 29 around there, right? Pulled on back just like we expected. It was a pretty big focus for me last week. I was shorting this stock on the way down. So we did really, really well with it. I played it safe. I didn't go crazy with my position size. I didn't hold it for too long. I wanted to play it safe, and most of the activity happened after market hours anyways. It dropped 40 to 50%, if I'm not mistaken, on Thursday, and then it dropped an additional, imagine losing, 2 days in a row, just taking a hit of losing 50% and then losing 50% on that position. So I think BBBY is a great example of why beginners should always be reminded to not trade with emotions, to always trade with a plan, and to never be afraid to lock in profits. I think that was a huge lesson learned for a lot of people that ended up bag holding and thought that something was going to happen that's never happened before. You either learn from your mistakes or you're going to continue to make them and just burn through, your entire account. So let's go ahead and move on to the next one. So BNED. Alrighty. We'll do a couple more after this, and then we'll call it a live stream. So BNED, which is Barnes & Noble's strong descending pattern. It was doing really well during 2021, but it looks like it's been struggling ever since. Right now, trading at $2 a share. I see no reason on why this would be a good stock to invest in. It looks like it's been struggling and struggling bad from $12 now all the way down to $2. I don't like trading stocks that are less than $5 a share. I don't have a focus on, lower cap stocks or anything like that. And it's just unfortunate to see that a big company is now trading at less than $5 a share. So they're either going to have to do a reverse stock split to get their price per share up, or they're probably going to get delisted from the NASDAQ. So something that we'll have to follow up with. All right, let's move on to the next one. So we got Disney. Let's go ahead and break down Disney again. If it's not too much to ask, if you guys can drop a thumbs up on this video and make sure that you subscribe, as I upload new videos every single day. So overall, strong descending pattern. We had a really nice run up, getting rejected by this moving average. The moving average, if you look, on the day chart, you can almost do a technical analysis on anything right now, except for Apple, but almost everything else is getting rejected by the moving average on the day chart. So it's a very strong resistance level. We're most likely going to be retracing this week as well. And, all I'm looking for is progress. Pullbacks are never going to be something that you should be scared of. You have to understand that even in bull markets, the markets always pull back a little bit to continue to rally. So I'm excited for this pullback for Disney, for Apple, for Tesla, for Amazon, for all of those companies. And the reason I'm excited is, things are getting better to an extent, right? Inflation has shown, based off of the last CPI data report, that it's peaked. Oil prices, energy prices are beginning to come down. We're still not perfect, and they're still going to raise interest rates, but at least it's not as bad as it was before, right? So even if we do retrace a little bit, it's exciting, right? It's exciting for those that prepared, because you get to buy things at a cheaper price level, especially if your intention is to invest long term. If you're trying to trade, then make sure that, again, direction is in your favor. If you see the market's choppy and or direction is not in your favor, don't overcomplicate it and just move on. Let's go ahead and move on to NIO and Carvana. So here we go. NIO, strong descending pattern, getting rejected by the moving average. Yeah, trading sideways right now, but overall strong descending pattern. If Tesla begins to pull back and the rest of the market begins to pull back, so will this. I don't like these competitors. I don't think that they're actually companies worth investing in. I have heard good things about Rivian. I have heard good things about Lucid. NIO, again, still not a company that I know much about, but I can tell that that's been struggling ever since its overall peak when all EV companies were peaking during that time. So let's do Carvana real quick. After this, just so it's okay, I'm going to break down a couple different plays that I'm going to focus on. A lot of you guys are talking about long-term plays, and I think that's very important. So I think it's great to have intention in place for long-term investments, but I thought if it's okay with you guys that I would talk about how you can make money if the market begins to pull back, and that's what I'll talk about in the last 5 minutes of this live stream. So Carvana, strong descending pattern. The thing that I loved about Carvana when it was trading at $300 a share is I live in Arizona. Carvana, the owners are from Arizona, and they live here. They're one of the wealthiest people here in Arizona. I think it's a dad and a son, and it's just insane to see how they were absolutely killing it during pandemic conditions, and then now from 376, they've hit lows of $20 a share. I mean, they've lost 90% of their valuation, and it's just crazy, right? They laid off, I think, 25% of their workforce. It's just bad. It's really struggling. Lower lows, lower highs. Direction is not in your favor. It's just something that we're going to have to follow up with, especially with these used car prices as they continue to drop, and demand is only going to slow down as they raise interest rates, as it's less of an incentive for people to want to spend money on vehicles. So something, again, we'll have to follow up with. Carvana I see to be a shot in the dark. It's kind of like a Hail Mary, right? It's something that, yes, it could end up paying off, and it's so cheap when it comes down to its price per share. But just make sure that you understand that the cheap can always get cheaper, and this thing can continue to sell off before it even gets better, if it ends up actually getting better. So let's go ahead and talk about some plays that will do well when the market begins to sell off. The reason I'm going to be talking about this is SPXS. This is the S&P 500. This is the Bear ETF. This is a triple leverage ETF, just so you guys are aware of this. This goes up when the S&P 500 market goes down. So if you see that the S&P 500 begins to go down, this goes up 3 times that. So again, it was up about 4% on Friday, which means that the S&P 500 was down a little bit over 1.25%, something like that, right? There's also SQQQQ. This is the NASDAQ ETF, and this one goes up when the NASDAQ market goes down. The NASDAQ is a little bit more volatile in comparison to the S&P 500 and the Dow Jones. It's one of my favorite markets to focus on, and it also, again, if the market begins to aggressively sell off, then that means that SQQQ is a great way to be able to kind of like hedge your positions and make money when the market is selling off. And then the last one, I think, is SDOW. Let me double check. Yeah, SDOW follows the Dow Jones, and then this one goes up when the Dow Jones market goes down. I think it's going to be a pretty interesting week. I mean, again, like I said, the NASDAQ market is already down more than 0.5%, which means that SQQQ, the one that we just talked about, should be up at least 1.5% by the time the market opens tomorrow. One of the things that I do want to remind you is, again, these are not investment vehicles. These are triple leveraged bear ETFs that is a good way or an outlet to be able to make money during bearish markets, right? You don't have to hold any of these overnight. You can day trade them if you see direction to be in your favor. But if you suck at risk management, or you're just not the best when it comes down to cutting losses, I just would not touch these inverse ETFs. The things that I loved, I love trading them, but I know how to manage my risk, right? And I think great things come with experience and responsibility. And sometimes, if you're an absolute beginner or you're just getting started, I just don't want you to put yourself in a position that you simply cannot tolerate, right? So that's why sometimes we don't even encourage beginners to trade something like SQQQ, because if direction changes quickly, as it always can based off of news, I don't want you to get caught holding the bag, right? It's kind of like those AMC and the GME and the BBBY traders. I think they're a great example of beginner traders that think something has to happen, but it never actually does, right? They have a very naive mindset on how to actually trade in the market, just due to the lack of experience. And we all start out that way. So by understanding that the markets tend to be more bullish long-term than bearish, it makes sense on why you wouldn't want to hold something like SQQQ or SPXS or SDAO, because overall, long term, these are going to most likely continue to sell off. So please make sure that you are aware of that. Other than that, I'm very excited for this overall week. I hope that you guys are too. If you guys have any questions, again, we'd love to have you at our TechBuds HQ. We're going to have a pizza party this Thursday, right around the afternoon time. So I hope that some of you guys can join us. Yes, it is for free. We have our staycation winners visiting us, so please make sure that you guys, visit us at the HQ. All I literally ask you to do is to send me a message via Discord that you plan to come, just to make sure that we have enough food and drinks for all of you guys. So either shoot me a message via Discord, which is the first link down below if you guys want to come, or if you have any questions about getting started, or you can feel free to shoot me a direct message via Instagram. And friendly reminder, I only have one Instagram account. It's linked down below, and yes, I am verified. All the other Instagram accounts are fake. I never message you first. I never ask for money, and I will never reach out to you first without you reaching out to me. So I'm excited for our live trading session tomorrow, and that's going to be right at market open. For those that have been waiting for a huge discount, we're running a $100 off. You don't have to sign up, but if you want to be able to watch me trade live, if you want to work with me on a closer basis, then that is the only thing that I offer, and that is Learn, Plan, Profit 2.0. And again, it's $100 off, and it's the second link in the description. So if you want to take 2 minutes to learn a little bit more about it, see if it's a good fit for you, and I'll see you as soon as tomorrow at market open for our live trading session. If you have any questions before you sign up, then just shoot me a direct message via Discord. And again, that's that first link down below. Like always, let's make sure that we end the year on a green note. Take it easy, team.